Hello everyone, this is Evan here from the Trade Risk on Friday, November 18th with a weekend market recap video. We are going to cover all of the major markets, market environment, individual names, and then finish off with some trade ideas, some actionable trade ideas to have on your watch list heading into next week. So plenty to cover. Let's jump into the charts here. S&P 500 closed up almost 1% on the week. We're going to look at the weekly chart right here, 96 basis points, and you can see we're just underneath the prior all-time highs that we made back here in August in the SPY ETF. Now, notably, this is the unadjusted chart. This does not include dividends. If you were to look at a chart of dividends included, we would actually be already at new all-time highs. Keep that in mind, but for reference, for context, we're going to use this chart right here. So we are approximately $1.10 away from those intraday all-time highs. We're going to see if we can get there next week. But importantly, we had what most would consider a follow-through week this week. So that means last week was our big breakout week, right? That was the reversal of this kind of downtrend, the sideways to downtrend that we were in for multiple months. Last week changed that, where we had a 4%, almost a 4% surge to the upside in the SPY, bringing us back to the upper end of this range, upper half of this range. And now this week, we gave none of that back. In fact, we actually made progress. We made follow-through progress. That's constructive. That's what you want to see at inflection points or at the start of new trends. So for the bulls out there, that is a very, this week was very constructive, and we're remaining overbought. That's also very constructive. I know that scares most people, but when you can actually remain overbought, not give a whole lot back in the form of retracements, that's actually very sort of healthy, pent up, and signs of underlying sort of demand underneath the market. So if we go back to the daily chart here, you can see once again, we did close lower here on Friday, but effectively, nothing changed whatsoever here in the technical picture. We're still well above the 8-period EMA. MACD's rising, lots of momentum here on this very fast surge off of lows. And don't forget, prior to the election, if I were to draw this little rectangle down here, we were oversold, we were oversold, and we finished lower, 9 days in a row or 10 days in a row in the SPY, which was breaking records on number of days down in a row. Well, we're really, just unwinding all of that, or in fact, we're putting that positioning back on with such, and again, we sort of talked about this concept in a prior video. I don't want to go too in depth on it, but sort of just pointing out that many traders going into the elections very hedged or very light and essentially very neutral. And once you get that reaction, once the event's out of the way, we realize the world is not coming to an end. There's a scramble to reposition, to chase the market, and that's what you're seeing now. And for us little retail guys, we can reallocate in one day. But for some of the bigger guys out there, they can't just pick everything up that they want for new exposure. It takes multiple days of buying. That's the sort of pent-up demand that you're seeing over the past few days. Of course, this is my interpretation of how I see it. Bottom line is, this is still very bullish action. No, we have not quite broken out from the prior highs. We could fail here at these prior highs. We could continue to be range-bound. That is a risk. But for now, momentum and breadth and all of the sort of constructive things you'd want to see behind potential new trends are pointing to the upside. So that's the way I'm going to sort of position until proven otherwise. That's the way we've been playing it. We've been pretty aggressive in our positioning all this week, rotating in and out of names as we have profit, getting back into new names. So definitely want to be playing this market on the long side. Certainly overbought, understand that, but if you have your strategy and you look for some low risk sort of entry points in individual stocks, I think you can do just fine here. If we go to the IWM, this is of course the big news here, where we are now up, let's see, 10% last week, and we added another 2.85% this week. Once again, a strong follow-through week. We gave none of last week's action back. That's very healthy, and we are at all-time highs here in the IWM, which is extraordinarily healthy. We just blew past all of that prior supply and resistance throughout 2015. So very healthy action, very strong sort of pent-up reallocation to the small caps. That's very risk-on and bodes well for sort of the intermediate and perhaps long-term trend. Again, short-term, You can expect some volatility, perhaps some pullback. You might be able to get a better entry. But once again, when you're looking out multiple weeks, as we see it, very healthy. It's a market you want to be interested in sort of buying those dips. For the Qs, you can see we did finish higher as well, 1.31%. Let's take a look at the daily action here on the Qs. We did get this nice sort of 3-day bounce higher throughout Tuesday, Wednesday, Thursday of this week. Friday we did push to new to make new recent highs here, but we couldn't quite hold on to them, closed on the lows. So we're going to get into some of the individual names that make up a lot of or have a high weighting in this Nasdaq 100. You can see they're all acting in pretty similar fashion. Be interesting to see next week, can we get back above these highs here? 118 certainly seems to be a level of significance here, and if we can get the Nasdaq back participating on the upside, I think that's going to add a lot to sort of the underlying breadth in this market, which could certainly fuel us for either the next leg or next sort of rotational aspect to it, wave, depending on how you want to look at it. So the Qs again still range bound, got some resistance here short term. You may have a little bit, maybe we get a little more probe to the downside here. Maybe we chop around in this range for the rest of the year. We'll have to see, but for now, Qs got some recovery this week. Let's see if they can add to it next week. Now getting into some of the other major markets. TLT, another big story. This has just been a massive unwind. Last week down an incredible 7.36% here in the long bond. And this week we are adding to that sell-off by 1%. Now I have this line drawn down here where this is, you can see my note here, I can make this bigger. This line, that 120.60, those were the prior year-to-date lows. These are the lows that we made in January. I think it was the first or second or third trading day of the year, was the lows, the prior lows for TLT. You can see we pierced below that level on Friday, and we did get a little bit of a bounce off of it, but we effectively just made new lows on the year. As far as where we opened on the year, I believe it was at right around 121.80 or 121.60. So we're now negative on the year. We've erased all of the sort of upside progress here in bonds, and we're threatening to sort of push into the negative. So there's a little bit of confluence here on that sort of prior January opening price and lows. See if maybe it can hold here. Maybe we had a big kind of overreaction and maybe we can sort of stabilize here. I'm not going to put my money there. I don't want to bet on that, just because this trend is very strong. There's a lot of momentum on the unwind here, so I don't want to get in front of that and try and blindly buy the dip, but something to consider if you are trying to itch to kind of look for a reversal trade. Check this spot right here, Friday's lows. There's a little bit of sort of prior memory there, so just keep that in mind for TLT. Otherwise, sellers obviously in control. Let's move to oil next. USO did see a good, nice bounce back this week. Almost got that full bullish engulfing week, but couldn't quite take out the highs here from last week at 1037, but it's pretty damn close, 5 cents away. So this looks pretty good. We back to start the week, we talked about this sort of vulnerable bear flag. We were in this for a trade, got the reversal here. It's holding, right? We talked about $10 as being an important point to hold. It is. So all these things are looking pretty good here, to say that this might just be carving out this big sort of $2 range here in USO ETF. Maybe you get a play back to the upside, squeeze into the OPEC event later this week, or I'm sorry, later this month. Keep that event and date on your radar. If you're playing this, I don't know what it is offhand. UNG also seeing a little bit of a bounce back, particularly Friday and this week, up 6.5%, much needed considering it got blasted the past 4 weeks. So UNG did finish up on a good note. See if we can get back above 770 or so. That was the prior support in here throughout June, July, August. That'd be an important sort of level for the bulls to sort of to reclaim. But for now, you got to still be cautious. 8 and 20 are still not really favorably aligned right now. It's going to be probably choppy with a lot of gaps. Just a market I would want to avoid. There's so many better opportunities out there as I see it in the marketplace. Gold also continued to just get crushed. It's very similar to TLT, right? Go to the weekly chart. You can see coming into some very important support. This was support here through February, March, April, May, June, and we are now back at it, threatening to break underneath it. Be interesting to see if this is some type of overshoot and we can get a quick reversal pop back up. Might be an interesting play. Probably something I'll be paying attention to next week. if we can get a quick 1 or 2 day pop out of GLD, but for now, not seeing any signs of that. In fact, we only had a little 2-day kind of rollover here, so got to be real cautious, see how the next week starts, but GLD certainly getting beat down there, and silver, very similar situation here, right? If you go to the weekly chart, you can see coming back into some prior support, maybe not as well-defined support as GLD. I rather look for GLD for that reversal play just because there's so much prior support at its current price. Silver, you can see we did kind of pull back to this level throughout May and June, but not a place that I would look at right now for, high probability reversal. And of course, UUP, this is the index for the US dollar. You can see breaking out here of this nice sideways channel. It's hard to be bearish here on what UUP could do, and given the trend, the strong trend throughout 2014, understand that the dynamics were different in perhaps the macro environment, but it's hard to be a bear here after you see this type of action. Nice strong surge higher, and that's that is certainly likely to pressure commodities and perhaps the stock market at some point, but not going to go there. Let's get into some sector analysis real quick, because nothing much has changed, right? IYT, we've been talking about this for months. The strength continues. Go to the weekly chart, you can see added 3.36%, so a monster kind of follow through week. It was up 6% last week, 3% this week. It's ignoring overbought conditions and it's just running higher. Very strong. That's where you want to be looking for trade opportunities. That's where we have some trades on. IYT, that's where, again, following those hot sectors or those sectors that are in demand. That's going to be very important. Semiconductors also breaking out to new recent highs, this year-to-date highs, multi-year highs this week. We put out a post on Wednesday, Thursday, as it started to resolve this range to the upside, and now just a few days later we are already back at new year-to-date highs. Ignored the previous highs here at $70.21 and just closed pretty strongly. So nice to have this leadership group back in there. Don't forget, we are up almost over 30% here in the semiconductors. This has been a very strong leadership group throughout 2016. It was overbought for most of the year. It finally consolidated. Now it looks like it's getting ready to sort of continue that trend back to the upside. So very important, very key index to have ETF back in motion to the upside. And finally, financials continue to work, right? They didn't make actually, they did make a pretty good amount of progress this week, 2.26%. So again, nice follow-through week to last week's impressive 11% move. So once again, those are the three leadership trend sectors that you want to be paying attention to. On the downside, same relative sort of losers here in this current environment. Staples continue to be weak. XLU continues to be weak. And healthcare actually, again, it's on a relative basis, so remember, you just have to keep in context. There's a lot of specific sectors that are working. XLV did have that sort of nice pop here immediately following the election results last week, but you can see it's starting to sort of continue that retracement and kind of get stuck in the water here. So you really just want to see a higher low get put in, and then some of this pullback resistance taken out, maybe around $70.60, get back above there, and you could maybe get a nice sort of rotation bid back into some of these stocks. So just be aware, XLV getting kind of staying weak here, and you want to just pay attention to see if it can put in that higher low. So let's get into some individual names, and then we're going to look at a few trade ideas heading into next week. What I want to point out is we talked about the Qs and how they had a nice kind of multi-day move, Tuesday, Wednesday, Thursday, and then they kind of stalled out here on Friday. Well, a lot of these components, they all sort of look the same, right? The Google, for example, right, kind of got hit last week. They got this strong kind of sell-off impulse leg through support, broke down, and then we got these nice sort of 3-day pops, and then right into resistance, right into prior support. It kind of failed today. It pushed up early and then failed closed on the lows. So what you're interested in, particularly next week, is this going to be was today a nice sell opportunity here where you're going to continue a newly kind of form downtrend in some of these big cap names, or are we going to be able to stabilize, put in some type of higher low, and then get going to the upside, perhaps retest these lows one more time? So that's what you're going to be playing with, and a lot of these names look very similar. Facebook, again, not as we had a 2-day pop here in Facebook, and then you have a little bit of a reversal today on the 8-period moving average. So this is even weaker than Google. Amazon doing a little bit better, right? It did get through 3-day pop, got through the 8-day, but you can see it's starting to just kind of waver just a little bit here on Friday. Did close positive, but you can see there was some kind of pent up sellers up there above that 760 level. What else? Netflix. A little bit of a different look, still just kind of hanging out sideways here. It didn't really get that nice 3-day pop like some of those other names did. It's kind of sitting in the middle of this gap here, wondering if we're going to kind of break down and fill it, or can we actually stabilize and then start to run to the upside. That one's going to be pretty interesting. Let's move into some of these individual trade ideas, because I think those are going to be the more interesting names to look at. So TXN, this is one, remember, following the leadership groups. This is semiconductors play, right? If you go to the weekly chart, you can see nice breakout here this week. If you zoom out here, this is all-time highs here for TX. Actually, is it all-time highs? I think it is. So again, a breakout here to at least multi-year highs, probably all-time highs in TXN. A little bit overbought, yes, but a name that's moving, put it in a nice long multi-month base, could be a nice mover into next week. Foot Locker, I believe they had earnings out this today, but I'm not 100% sure on that. Regardless, chart looks great. Had a nice base throughout the past few months, broke out above it. Nice kind of check back here. Failed to break back down, closed strongly. Looks interesting heading into next week. CELG, this is CELG, hanging out really high and tight here. Had the nice big gap up, right? And it's holding on to that, and it's staying very, very pent up here above the 8-period. So looks like maybe you could start to continue to squeeze here higher. It is overbought, but like we say, these are the names that you typically want to be paying attention to, because they can generally run a lot farther than most think. APO, this is one that we tried to play with a pretty tight stop, got stopped out of this recently, but still looks pretty good. No position in it right now, particularly this weekly chart. You can see a nice kind of base handle that this thing built out here over the past several weeks. Probably want a little more continuation out of this next week. Let's see if it can clear these highs here where it's failed for the past week or so, but if it can start to clear above 1950, you got one that's probably in motion there to the upside. And finally, AKAM, still waiting for this one. The setup is looks decent. It's holding this gap higher. That's what we want to see, if it can actually hold. We had the nice pop, we had follow through to the gap higher, but then we had this big pullback to this gap area. It didn't come back in and fill it, right? These low held, that's constructive. Now let's see if we can get a move back above Thursday's highs, above $67, and then maybe this trend is back in motion to the upside. So 5 names right there. Hopefully that gives you something to put on your watch list. Thanks guys for watching. That'll be the end of this video. If you haven't yet subscribed, please do so. Bottom right hand corner keeps you up to date with all of the latest that we're doing. And as always, thanks again. Have a great weekend, and I will talk to you soon.